What's going on, everyone? Welcome back to the channel. I'm Troy, and today we're breaking down three major stock splits that traders are watching closely: SSUMF, SMERY, and KLAC. We're going to cover what each company does, why they're splitting, the exact split ratios, and how these events can affect traders and long-term investors. This is Stock Market Media. So, quick refresher. What is a stock split? A stock split is when a company increases the number of shares while lowering the price per share, but your total value stays the same. That's for a forward split. So a forward split before the share, before the share at 800, then after, for a 4-for-1 split, you have 4 shares valued at 200. The total value is still 800, but it's divvied up. It's kind of like getting a $100 bill and then asking for 5 20s. That's a 5-for-1 split. So forward splits usually signal strength. Reverse splits usually signal weakness or restructuring. So let's get into the first split. SSUMF, Sumitomo Metal Mining, a 4-for-1 split. Sumitomo Corp approved a 4-for-1 stock split effective July 1st, 2026. What they do is one of Japan's largest general trading and investment conglomerates. They operate in metals, transportation, and construction systems, energy and chemicals, infrastructure, real estate, consumer and lifestyle products. They invest global and run diversified businesses across multiple sectors. So what does this mean for that? So that means 1 share is going to become 4 shares. The price is going to be divided by 4, but the total value is going to stay the same. They also mine in specifically nickel, copper, gold, and battery metals for electric vehicles. So things to think about if you're thinking about investing in SSUMF. So they're splitting because of a growing demand for EV battery metals. So batteries for electric vehicles, the metals that are in them, that's what it's for. It's also to expand global investor interest and wanting to keep shares affordable and liquid. Mining companies don't split often, so a 4-for-1 split is a strong signal that SSUMF wants more retail participation and sees long-term growth ahead. Next, we'll look at the price. So it's looking at $44 a share, basically $45 a share. So if we do the math on that, a 4-for-1 split will be around $11.25. So look for that in June. Look for that in July. Next, we have SMERY, or SMERY. The Sumitomo Electric Industries, another Japanese giant with global reach. They also operate in Siemens Energy. So they're doing a split ratio for 5-for-1. They announced a 5-for-1 effective June 22nd. So make sure if you're going to get in, you're going to get in before then. What do? Siemens Energy is a global energy technology company. They operate in gas and steam turbines. They also operate in automotive components, electric vehicle systems, semiconductor wiring, and industrial metals. The split ratio is 5-for-1. That means 5 shares are going to become 1 share. 1 share will become 5 shares. So if you have 2 shares, expect to own 10 shares after the split. Why they're splitting? Just like before, electric vehicles and semiconductor demand is rising. The ADR shares need to stay accessible for U.S. investors, and high liquidity means more trading volume. A 5-for-1 is a big split, and it shows SMERY wants to attract more U.S. retail traders and stay competitive in the global market. If we you look at it, it's 194. So you're looking at around $40 a share after the split. And then finally, KLAC. This is our big one. Split ratio, 10 for 1. Oh my gosh. Now let's talk about KLAC, the KLA Corporation, one of the most important companies in the semiconductor supply chain. KLAC builds inspection and metrology systems used by TSMC, Samsung, Intel, as well as, sorry about that. Split ratio is 10 for 1. What this means is one share is going to become 10 shares. So, this is our big one. So, it looks like it's probably going to be $192.76, give or take. Still got plenty of time before the split. But if it reaches 1930, then it'd be $193 a share. So if you own one share, expect to own 10 shares after this. If you own 10 shares, expect to own a whopping 100 shares. Just think about that. Massive. Now, how are these splits going to affect traders? Stock splits create opportunities for momentum trading, short-term volatility plays, option strategies, and swing trades. Common trader behavior is buying the rumor, riding the hype, selling the news, and playing the post-split dip. Splits don't guarantee gains, but they guarantee attention, and attention creates volume. So, what should long-term investors know? That splits don't change fundamentals. They don't change revenue, earnings, or valuation. They simply repackage your shares, but they can signal management confidence, strong performance, and a desire to attract more investors. A split isn't a reason to buy, but it's a sign of a healthy, growing company. So, here's the bottom line. SSUMF, 4 for 1 stock split. SMERY, 5 for 1 stock split. KLAC, 10 for 1 stock split. All three are forward stock split, meaning more shares, lower price, same value. Splits increase liquidity and retail access. They often create short-term trading opportunities, and they signal confidence but don't change fundamentals. If you're a trader, these splits can create momentum. If you're a long-term investor, splits make shares easier to buy and hold. Thanks for watching, and let's jump into the charts. If you like this kind of content, be sure to like and subscribe, and I'll see you in the next video.